everyone, this is Beena, Assistant Professor, MBA Department from SNS College of Technology. So today we are going to look into one of the important topic, the Microsoft Excel. So what are all the functions are there in the Microsoft Excel? So to begin with, let me first get into the subject like why and where we used to have this kind of Microsoft Excel. So start from the small calculations or small data collections till a big data. To visualize a big data, we'll be using this Microsoft Excel. So let me go through like what are all the Microsoft Excel applications being found in the financial functions. So everyone might have a life in once in our lifetime we'll be going out for the loan processes. So just go through like how the Microsoft Excel plays an important role in the financial function. So to begin with, let us first understand what is the Microsoft Excel. So to begin with, Excel is a global leader in data organizing and analysis used by over 750 million people globally. So business rely on its financial reporting, decision making and insights. So this presentation will cover you the formulas, balance sheets, what are all the inputs that has to be done, and the depreciation and the charts. So let's go with the example. So first one will be the financial formulas. So PV and PMT. So what is this PV? The PV is all about the present value. And what is this PMT? The PMT is all about the payment. So what is this PV? The present value will be calculated for the current future payment. Say for example, if we are going to have a loan amount for about 5 lakhs or the 10 lakhs, that will be the present value for which we are going to calculate the payment. That is the EMI, monthly installment, how much we are going to calculate the monthly installment. So for that, we are going to go for the PV formula and the PMT formula. The PV formula where you need to give the rate per annum. So the rate of interest, if it is 4%, since we are calculating it for per annum, we need to go 4% divided by 12. And if it is given the NPER, that is the number of months or number of years, you are going to calculate the EMI amount. So if it in case of 12 months, it is going to be 1 year. Of it in case of 24 months, it is going to be 2 years. So the number of years into 12 will give you the NPER value, and the EMI value, that is the 1,000 rupees. So this did, or when you enter all these three details, you can get the present value for which you are going to avail the loan. And next comes the payment. So this is what we are going to go with the EMI, the monthly installment payment. So for this, what are all the details we need to implement is again the rate of interest, which has been calculated for per year. So it will be 4% divided by 12 and 360 months. So, and also the loan payment, say for example, it is for 2 lakhs. So for 2 lakhs, what will be the monthly EMI? So to calculate that, all these details we need to be inculcate in that, so that you will get the PV and the PMT value. Next coming, what is meant by the NPER? So NPER denotes the number of periods. So what is this number of period? Say for example, for how long you are going to calculate the loan amount, that will be given in the NPER, that is the number of periods. Calculate payments periods for an investment. Say for example, you will be given the rate of interest, your PV value, the present value and the EMI value. So how long the loan duration or the investment horizon will be there. So that will be given in the NPER calculation. And next come to the point, the rate of interest. The rate of interest will be calculated per year. So the per year, what will be the rate of interest? So for this formula, you need to give the NPER value, the present value and the EMI value. So when you inculcate all these three values, you will be getting the rate of interest, which will be calculated for per year. So that is what this creating a balance sheet. So how come we are going to create a balance sheet? We'll be going through, because whenever we are working in the organization, we'll be going with creating a balance sheet. So what is creating a balance sheet? How come we can use the Microsoft Excel in creating a balance sheet? So first one, it's Excel simplifies creating the interconnected balance sheet. Say for example, if you want to sum, if you want to subtract, if you want to multiply, if you want to do addition, subtraction, all the four kinds of important formulas that can be implemented in the balance sheet. And next comes the fundamental equation. Say for example, assets equal to liabilities plus equity is to core to accounting. So these all the equations, these all the fundamental equations can be worked out in creating a balance sheet in the Microsoft Excel. And third will be linking data. Say for example, linking these cells for seamless data flow. Say for example, cash flow, if you're going to select this cell, and if you're going to give the cash flow, you can get the cash flow statement for that. So that is how it will be simply creating a balance sheet. So next, what are all that can be done in the investment calculation in Microsoft Excel is the investment calculation, IRR, internal rate of return, and NPV, the net present value. So what is internal rate of return? So it will measures the project profitability that is equal to NPV. Say for example, what will be the internal rate of return that can be calculated using the formula which can be implemented in the Microsoft Excel. And next, we can calculate the NPV value, that is the net present value. That is also can be calculated using the Microsoft Excel. And say for example, the NPV, the rate of interest, and they evaluates the investment for which discount future cash flows you are going to get. So all this can be implemented. You can get the net present value. Hope this video gives you an important information how to calculate the financial functions such as like PV, PMT, NPER rate, and the investment calculation, and how to create a balance sheet in the Excel. So thank you for watching this video. We'll meet in the next video. Thank you.